for September 15th. We're right smack dab in the middle of the month. I'm going to make a couple comments about Charlie Kirk, and I'm going to be the first one to tell you that if you don't want to hear them, you can leave now. If there are any discouraging comments, I will kick you out. It's going to be that simple, and I'm going to relate this to a couple things that we do here at Hurley Investments that relate to Charlie Kirk. With that said, I'm going to dovetail on a couple of these. Last week, you guys should be very happy with your portfolios. And it really comes down to a couple of things that hopefully I can show you by way of charts today. Looking at the beginning of this year and what happened to us by way of the S&P 500, I'm going to go back, we're 9, so let's go back 10 months. I don't know if you remembered or not, but we suffered from the end of February till April a dramatic 21.3% roughly drop down, and then we picked it back up and actually got back to it in July. So there is a pretty standard V-shaped recovery, and a V-shaped shoulder, shoulder, head, but it's basically almost upside down. And if you were to look at it just a little bit differently, it'd be considered an upside down head and shoulders pattern. But most of us forget about our drop down on the S&P 500. And that drop down, in my mind, 21.4%, it's going to be a pretty significant drop down. Now, a couple things we did differently. We have moved money out of Apple. And a lot of people forget we were moving money out at 250, 255. Money was shifting out of Apple. A significant amount of money shifted out of Apple. Apple is still not up to those highs at the beginning of the year. Apple has been pretty much a dud. We had a couple people that we strongly urged to get out of Tesla. For the couple of you that moved out of Tesla, taking a look at the chart, it looks very similar. Pretty significant move down. Still has not caught up to the highs of the year. And if you remember, Apple moved over to Google. One of our biggest moves was Apple out of Google. And pretty significant for those that would remember. Had a pretty dry drop down back up to 250. Using our methodology for an understanding, nothing like getting in at 200 and 190. We got right around that area. I'm going to make that pen color black. We got right around this area, picked up 30 to 40% more shares of stock, and the stock is up 25%. 25% plus 30 or 40%, that's how we get a 55% return in Google. And that's where we did some shifting of our money to. We shifted money out of Meta. We shifted money out of Meta a while ago. Some of it at 750, some of it at 725. Pretty interesting. The highs for the years are only 764. For all of you that were like, we got out at 719, 724, 726. Yes, it's $40 higher. Where did that money go? That money went over to Micron. Pretty neat to get into Micron. Some of you got in here at $75. Some of you were in the 90 to 99 range. Some of you were up here at the 110, 111. Had a nice drop down, picked up somewhere between 60 to 80% more shares of stock, and then it went on a tear. Some of that tear was last week, but it went on a tear after we picked up 60 to 80% more shares of stock. And then from 100 to 157, we've got another 57. If you want to go from 110, we got another 46% return right here. This is how we're getting 100% return on part of your portfolio. I'm not exactly sure how we did it, but we created some money so we could start to get into NVIDIA. NVIDIA was one of the same stories. Really interesting previously to get into some of NVIDIA at 100. Some of you, yes, we got into NVIDIA in the 120 range. Had to run down to 86. Picked up somewhere between 40 to 60% more shares of stock. Protected it at 180 most recently and 170, pretty sure it was 180. But then from the 120 up to the 177, we've got another 50% return on the stock. This is how our strategy works. This is why we're doing what we're doing. Now, there are a couple things that resemble Charlie Kirk. You have to be all in. There's no sitting on the fence. You can't use this for a hobby. Investing, just like religion to a certain degree, if you want the good results, you have to be all in. I'm going to make this comment, and I appreciate it. Some say, well, let's face it, he was a debater. He went to colleges prepared, spent lots of extra time knowing the facts and where the facts came from, and he was willing to talk with everyone. Some of you have asked time and time again, man, it can't be that hard to do this job. Hey, we're always compared to the S&P 500. Hey, we always have to know where our facts and figures come from. Hey, you have to remember where you did this, why you did this, why you did that. A lot of people thought he was there to argue. I loved the fact that he was there for the future voters. Our kids are going to be the future of our economy.
part of the reason why I do this is because it's for your guys' future. It's for my future. I truly hope that I have a couple of kids that could do this, my Scott and my Taylor. I really hope my Jordan and my Heather choose to do this too. I would love for my daughters to be the women in this arena where there's very few women that actively manage portfolios and do it without, and I'm going to say this politely, doing it without selling their body or out and out lying for their returns. I want them to be in an area here where, in all honesty, my kids have to do something very hard. It's a tragedy that Charlie lost his life. But I definitely think you're going to see that movement come along. And it comes down to the fact that you can't forget. And that bothers me in my industry because a lot of the times people forget what we have done in the past for portfolios. People forget all the hard work that goes into it. People forget the years where you beat it in a 2008 and those that are in the market will never, ever catch up to you. I'm not saying I'm a Charlie Kirk. But what I am saying is if you want to be successful in the stock market, a lot of his type of attributes are exactly what you need to be successful in the stock market or to do this for a job. And it's difficult. What he was doing was difficult. Don't ever forget, being in the stock market is difficult. I know a lot of you have been through educations. I know a bunch of you are still doing some of your own trading. Go ahead and take the bad with the good. In the end, it's going to be worth it. And I'll be honest with you. Yes, I'm 100%. I am 100% scared to die. I've been trained to live. All of my training is training to live. All of my training is training to survive. All my training, if you're looking at search and rescue, is how to find someone and keep them alive. I'd like to think I run those attributes to keeping portfolios alive, keeping people calm in stressful situations. Hopefully, being a sounding board where you can call me, where you can ask me questions. When you're worried, when we run into something like Schwab, Kevin, I want you to call me on Tuesdays until I'm comfortable again. 2 of the 4 of you are here today. And I want to thank you for being able to talk with me and letting me help get you through some of the tough times. If your methodology doesn't work, you're always jumping around to something. And I think this is really, really unique. Charlie got promoted. And he is now living with Christ. And the interesting point that someone mentioned about that is it comes down to if you believe, and I know it's kind of not really important for some of you, but if you believe in the methodology, even when the stock market's getting killed, you're going to come out better on the other end. If you believe in Christianity, don't forget Jesus rose and lived on the third day. Which to me makes death a little less scary as I'm seeing a mother and two children go without a husband and a father. I happened to be up in Colorado last week and went through the Evergreen school shooting. Here I tried to get out of Utah, thought I was getting away from a horrific event here in Utah. Same damn thing was happening up in Evergreen, Colorado. This is my niece that we lost to COVID a couple years back. Hurt when I see my brother and others hurting for their loss of a loved one. And I also hurt when I've seen 2008 ruin 30 and 35 years of work for people. The methodology works. And it doesn't mean that as you go through hard times, it's not going to hurt. But again, if you believe and if you've seen it work, some people are going to call this faith. For those people we lost, we will see them again. As accounts struggle through those hard times, they are going to rise again because we've protected, we've added to them. They're going to be better on the way up with more shares and a better opportunity to get you to where you want to be in the end. Some of us, it's going to be, hopefully it's going to be, it'll be religious. It'll be with our family and with our Heavenly Father again. Some of you, it's just making sure that at the end of your life, you have enough money to be taken care of. Some of you, it's just to keep the money you have so that it can be passed on to family afterwards. The road is tough. At times it's heartbreaking. But we have the answers. We have the answer that got us through a 2008. For those that are hurting and missing loved ones, for those that have named 3 of their kids after friends or family that have passed, we have those answers too, no matter how hard it seems. Guys, our answer for this week, we are waiting for a Fed rate cut and a dot pattern showing continued rate cuts. That's what we're waiting for to unleash another 20% type return in our markets this year. It's not just going to be a rate cut of 25 basis points. It's not just going to be a rate cut of 50 basis points. We're looking for certainty in the future. We're looking for a rate cut in January that's usually a slow month. that'll cover February. We're looking for things that boost our market higher, like progress with China trade agreement. If we're going to get through a great end of the year, it's not just rate cut, it's a pattern for the future. If we're going to get through skipping a recession next year and needs progress with trade agreements that's bringing more money into the market. I have the source, but apparently there's 7 trillion on the sidelines. And I have that source, it's down below. There's a lot of money that we have an opportunity to push our markets higher, regardless of being overbought, regardless of having historical new highs, regardless of having historical PEs that are just out of the world, comparatively speaking. Welcome to the new normal. If you think 17.5 PE is normal, we've averaged 21, 21 and a quarter for the last 10 years. The new normal has been inflated with bailouts and money pumped into the system, technology, AI, record growth rates, record trade, record business, both domestically and abroad. The new normal says that a 17 to a 19 PE on the S&P is no longer normal. I just took a look at it. The $7 trillion picture, let me get that out of the way. The $7 trillion picture is actually from Briefing. Pretty interesting how much money is sitting in market funds. It's shocking how much money has missed the last 3 or 4 years since 2021 of the upward run. It's amazing how we're probably going to have a pretty big correction in the near future. But 7 trillion sat on the sidelines and missed some pretty good years in the stock market. Imagine, and in fact, there it is. I'm going to highlight it because I wanted you to have some hope in our future, right? 7 trillion and counting, I like that, is sitting mutual funds, which is roughly 13% of the S&P 500 capitalization. You want to see another 13% boost in our stock market? There is your answer right there. For all those, oh, it can't come with AI, which I disagree with. I still think there's plenty of AI opportunities ahead as that explodes. We have 13% of the market capitalization sitting in cash. That is a huge opportunity for our stock market. What's another new, what would you say? What would be another new, I don't know what I'm looking for. New normal, excuse me, there it is. Another new normal that we should know about. Inflation rate is closer to 3%. I do think it'll come down, but I doubt it's going to come down to 2.0. In fact, everything I calculate, 2.6 is about the best our inflation is going to get. Our new normal will be closer to a 3.0 to 2.6 to a 3.0 than it will be at a 2.0. And again, simple answer on why this can happen. Higher returns are going to be looking for money elsewhere. There's your answer on what can move our markets higher through next year. Obviously, Dow Jones Industrial Average bullish. We're trugging along. Remember, I had a negative 2% on the S&P 500. We're still trudging along on the S&P 500. I'm going down to a zero return. Kevin, it's up over 2% month to date. I get it. But if you notice, I'm still expecting a zero return because it keeps coming down and bouncing off of the 50-day. I would not be surprised to see us run next week and the rest of this week pretty bullish, and then a bit of a sell-off into the end of the month to come down and test the 50 to run into a Christmas rally through the end of the year. Earnings will dictate that on those companies that should run into the end of next year. NASDAQ, still bullish, slightly over pot, probably still going higher, shows exactly the same chart pattern as the S&P 500. Yes, I changed my tune to instead of a -2 to zero growth in September. Yes, I want to be wrong. But we don't know yet, right? Earnings, no earnings coming up this week that matter. Garden Restaurants, Lennar, FedEx on Thursday, all non-issues. Nothing tomorrow will expire or be important for us. It's nothing more than, hey, what are we waiting for? The Fed meeting. That's it. We're just waiting for the Fed meeting. Nothing's important until that. On Thursday, leading indicators might run our futures, and on Friday, monthly options expiration. Typically, we go through a bit of a drop on monthly options expiration, and we pick it up again Monday. I've done as much protecting as I think I'm going to do for the rate cut. And when I say as much protecting as I think I'm going to do, we have very little that is protected. Other than Micron, which we just recently put some protection into place, we've got risk-free Bank of America puts that protect Bank of America at 50 because banks usually don't do good on rate cuts. Google, we have puts in place, but we have a bull put, a 210, 220. We shorted puts against our long puts, and Google's made a heck of a run. Just to take a quick peek, we're running on Google something fierce. We have a bull put in place with about 40 cents left. Man, you think I could just type the correct ticker symbol in. 251 today. We know it's overbought. On a big down day towards the end of the month, we're going to take the bull puts out and we're going to add protection back up there. Probably around 250. We might add it at 260 because it probably has another $10 run higher. We have for Meta, nothing on Meta. Micron, we just added 157.50 long puts in place on stock ownership. Meta has their earnings happening in the 23rd. So we're protected out to, I'm pretty sure it's the 24th of October that we're protected on on Micron at $175 or $157.50, or an even $157. But that's where we're looking to have Micron protected for their earnings coming up next week. All right. Oh, let's keep going through. NVIDIA puts are at 175 if we still have them. I think we took them off. We have Palantir with a short call at 180. That's our protection on Palantir. Nothing on Visa, nothing on Verizon. So for all intents and purposes, we're as protected as we're going to be for the earnings. And for the FOMC rate cut, that should move our markets higher. That will help us miss the historical downturn that we typically have in September. What's going to be different this September than other Septembers? A record amount of money sitting on the sideline, a record amount of earnings, especially related to artificial intelligence, a record amount of money on the side, record amount of earnings, and a record amount of another 1% dot plot pattern for a decrease in rates by 1% over the next 12 months. Interesting article. Boeing. Why are Boeing's planes featured so much in Trump trade deals? Interesting article to help you guys understand why Boeing has a run and still has a future run in front of it. Alphabet today became the fourth company to reach the $3 trillion market cap. Thank goodness that Alphabet, Google, as I've been calling them, I'm sorry, their real name is Alphabet. It's Google L for us. We're doing pretty darn good on that one. NVIDIA's breakdown, dismal jobs report, and other ills fell to sort of this bull market. I just found an interesting article on what's propped the market up through some typical downturns that move our markets different directions. And then little worrisome, but right now, more Americans are tapping their 401ks for cash. There's a record amount of hardship drawdowns right now, which, in all honesty, if I was going to look at this is most likely due to small business owners who are getting their products cheaply from China. I would almost bet, and I've got a friend or two that does this, the importing, the exporting, and the sale of cheaper China manufactured items that they then will sell here, like the May band. It's pretty interesting. A good friend of the family's family invented something called a May band, which is just something to help the girls that still fit in their pants when they get pregnant. It gives them an extra 6 inches down there to still wear the pants that they like, even though their stomach will no longer fit in the jeans or what have you. Excellent product, manufactured very cheaply overseas in China. She's been having to look for different ways to manufacture that type of product in a different country. All right, questions from you guys, and a couple comments came in. Let me answer those comments just so we can, well, I guess be on the same page, right? Interesting question. Boeing plans for the future, have they improved their quality practices to achieve duplicity and sustain amount of quality? So right now, yes. If you ask Boeing, they'll tell you yes. They've done hundreds of changes, but they still haven't lifted the 737s to above 38 planes a month. I think I put that in last week. in regards to Boeing and how they have to make the changes and adjustments. But their quality control, missing major bolts that are part of the plane that they're then hidden that they can't be checked on to make sure they're done. I forgot what those bolts are called, but it's on the fuselage as it goes together. There are 4 main bolts that will keep that fuselage together as they bolt the rest of it. And apparently some of those were not put in. It was just the everyday ordinary bolts where they've got these 4 heavy duty bolts on 4 points for the fuselage. So as soon as that lifts and they can produce more than 38 planes a month, you'll see Boeing up to $250, $260, maybe even $280 in a very, very short period of time. Kevin, thank you for being a patriot. Yes, but all I'm saying about Charlie is I was impressed with someone that gave his life for what he believed in and did so without, maybe did so the right way. That'd be the best way I'd say it. Any other questions you guys have? If you are unable to get into your account, please give me a call. I've said it for a little while now. We've had access to the accounts for quite some time again. So if we need to reset a password or you're not looking at your active account, give me a call and we'll get that taken care of for you tomorrow morning. And don't forget, if you log into your accounts, you should be able to toggle on the right upper side on your account number. A lot of your accounts we've linked together so you can toggle back and forth between the two of them. Yes, in fact, Maud, I'm surprised you didn't tell me that. What are you doing with Micron now that it hit its yearly target price? So there's 2 of you that actually have just asked me. So the short answer is, Dave, yes, Micron is now at its target price. I know someone that added at the money and slightly in the money short calls to go ahead and get that stock called away at a pretty good price with a little bit of credit. I think that's genius. For some of us, we're holding on. Some of us are holding on for earnings with 157.50 long puts. And some of you may have noticed that I have been doing a good job. For those of you that we have sold off shares, geez, I can't type it, where's the beans? So we sold off shares, we added a 160, 200, and boy, I want to say it was June 26 bull calls. Reason why? We might be wrong and the stock can go higher. So just something to remember, that even if, I mean, we don't just bail out of it completely, but we do want to make sure that we still have a position available. For some of you that were in the smaller accounts that were over leveraged, we took a great profit. Somewhere, you know, for 400 shares, we were taking about 22,000. For 500 shares, I think we were at 28, 29. For 6, 7, 800 shares, we were in the 30s and low 40s. We took that off, and we can we can put a stock replacement strategy in there for, I think on 500 shares it was like $7,200, taking a profit in the mid to high 20s. So that's what we're doing. We're a lot of you actually asked that question about Micron. Well, not a lot of you. 2 of you that are here said, hey, now that Micron is at its yearly target price and fully valued, yes, we're looking for different opportunities. We don't want to exit Micron at having stock put to people, but that does look like a possibility if Micron starts to fall down significantly. We'll sell off the stock. We'll run the puts down to, geez, maybe 120-ish again. We might re-enter the position. But yes, Micron is fully valued. We are looking to take profits. And sorry, Maud, that's what I was thinking. I'm surprised you didn't ask a question about Micron, because Maud and obviously David, you guys are the 2 that have been talking to me about it. If you guys have that question, then probably other people have those same questions as well. Maud saying, if I talked about it last week, I'm sorry. I have a lot going on and my brain is forgetting about it. But again, if when people have questions to me about positions, I find out normally most of you others also have those same questions. So there we go. Gotcha, Maud. Thank you. All right. Any other questions you guys have? If not, I want you to have a good week. Apologize for getting a little emotional on you today. Last week was a really tough week. And it's hard to sit with a family who has a daughter in a high school, a granddaughter in a high school during a school shooting. Hard when, a lot of the youth kids in my church group were at the Charlie Kirk shooting at the University of Utah, not Utah Valley University. Glad I was not there, so my college son had to take his younger brother to doctor's appointments, and he wasn't there to see any of that. So really tough week. I'm grateful that you guys will put up with me as I go through some of the hard times. And yes, I'm just trying to see if any other questions are coming in. I see no other questions coming in, guys. Have a wonderful week. I am looking to have Brian, our new advisor that I worked from the education side. I'm going to let him make an introduction next week, but grateful to have you guys here. Look forward to seeing you guys next week. If you do have any questions that maybe you're just not comfortable putting in with us today, make sure you email them to me, and I'll try to make sure we get those answers as quickly as possible. Guys, have a wonderful week. Look forward to that Fed meeting on Wednesday. Look forward to a bigger run in our market higher through a September. That's going to be one of the positive and one of the nicely positive Septembers that we've had in decades. Have a good night, everyone. See you next week. Talk to you later. Good night.